For the last 5 years, the Oak Harvest investment team has consistently messaged to both our clients and prospects that it's best to leave political bias out of your investment decision. Republican or Democrat, conservative or liberal, investing along politically biased rationale is usually a great way to lose money at worst and underperform the financial markets at best, more often than not. The 2024 presidential election rhetoric will be ramping up in the second half of 2023. Still, I want to quickly remind my audience as early as possible that more often than not, it's best to invest opposite the policies of our political appointees, not in line with their agendas. Whether we favor who wins in Washington politically or socially ourselves, they are usually quite good contrary indicators if one is trying to optimize your public market financial returns. I will quickly give you a walk down memory lane of some of the biggest stereotypes and thematics missteps an investor would have made in the last 20 years by following the standard media messaging around political agendas at the time. Just after President Obama took office in early 2009, the financial media was out in force messaging that 1, you couldn't invest in US stock markets because President Obama and his appointees represented socialism. The press promoted the story that Obamacare would destroy both the HMO business and the healthcare sector in its entirety, that the healthcare industry was uninvestable due to increased government involvement, that socializing our economy would destroy their businesses. So what happened? Well, United Healthcare stock, UNH, returned over 500% the next 8 years versus the S&P 500. Over President Obama's tenure, the S&P 500 had a stellar return of about 150% over 8 years. Back in 2009, the uninvestable healthcare group, as well as the entire stock market, turned out to be quite profitable for those who did. Alternatively, fast forward to 2016, when Donald Trump was elected. The conventional thinking back then was that defense stocks would do great under President Trump's term because he was tough on China. He would up the US defense budget, and he would force our allies to shoulder more of the financial burden of protecting their own countries. So viewers, what happened? While the S&P 500 rose over 65% during President Trump's 4 years, a great compound return, the defense stocks were bluntly 2 words, underwhelming and underperforming. The best of the group was Lockheed Martin, but it returned only 42%. It lagged the S&P 500 by almost 25 percentage points. Raytheon returned an even more paltry 10% over 4 years. Conventional thinking surrounding political policies were wrong when it came to producing superior public market investment returns. My third and final example of politically incorrect investment thinking centers around the common strategy being touted by financial media post-President Biden's election. The most common theme back then was that the Biden administration was pro-ESG and pro-green energy, and those industries would be great places for investors to invest their savings. Fossil fuel producers, those were the dinosaur companies. You were supposed to stay away from them. The messaging was wide throughout the press. Well, I hope you didn't follow the common lines of thinking. Why? Let's take a look at Tesla as the poster child for green energy or ESG investing, and Chevron is the example of the evil empire in the Biden administration's line of thinking. Fossil fuels. Since the end of 2020, Tesla stock has declined minus 30%, and that's with the huge bounce it's had this year. The S&P 500 had returned just short of 10% the last 2 years. And Chevron, that evil empire for green investors, what's it done? That stock has returned 104% over barely 2 years. Viewers, we all have political thoughts and ideas. We all have causes we want to champion. However, when it comes to your public investments, it's best for your investment returns to check those feelings, emotions, and political biases at the door. Your money cares about the marginal return on invested cash that companies make. It isn't colored blue or red, it's colored green. Are you trying to meet your needs or greeds in retirement? Give us a call here and schedule an initial consultation with an Oak Harvest advisor. We will sit down with you and help you and your family do the math to figure out if you'll be able to meet your retirement goals and needs. At Oak Harvest, we think our clients are best served by us helping them plan for their future needs instead of focusing on the past. The future is always uncertain, and that's why our advisors and retirement planning teams plan for your retirement needs first and your greed second. Give us a call to speak to an advisor and let us help you craft a financial plan that helps you meet your retirement goals. Call us here in Houston at 877-896-0040 and schedule an advisor consultation. We're here to help you on your financial journey into and through your retirement years. I'm Chris Perras, and from the whole team here at Oak Harvest, have a blessed week.